Hi everyone, Jordan here from ASM-Trading, your one-stop shop for everything Forex, and welcome back to another video. So in today's video, we're going to be covering off TradingView. TradingView is one of the leading platforms for looking at and analysing charts. In today's video, we're going to be covering off how to look at the charts, what tools you can use within the platform, and also covering off some basic indicators and how they work. So we'll have you looking at charts like a pro in no time. Without further ado, let's get right into it. So in front of us now we have TradingView. Now TradingView can be accessed via the online web version, which you can find on their website, tradingview.com. You can download it for your phone or your tablet on the Apple or Play Store, but in this case I've downloaded the application via the website for Windows. I just feel the application runs a lot smoother. Now there are free and paid versions of the software. We're currently looking at the free version. I've created a new account, so I've logged in for the first time, and it should mirror exactly what it looks like for you when you log in for the first time, so we can get you set up. With regards to the paid version, a bit later on in the video, I'll talk about that and the benefits of having the what they call premium version. Now I would recommend, if you've got access to a PC or laptop, it's a lot easier analysing charts on there for two reasons. Number one, having a bigger screen it's a lot less strain on your eyes when you're looking through the charts, easier to see things. And number two, when you're navigating the charts with your mouse, you're adding in drawings, it's just so much easier. And when you start doing this yourself, you'll see exactly what I mean. But let's start just by giving a basic overview of TradingView itself. Obviously, as you can see right bang in the middle, you can see we have a chart here. This chart is Euro USD, and we know that because it says up in the top left Euro versus the US dollar. And if you are trading Forex, this is going to be one of the things that you trade. But the first thing that I like to do when going into TradingView, I'm not a big fan of this all white sort of theme. It's just a bit much for me and a bit much for my eyes if I'm looking at the charts for long periods of time. And there is an option in TradingView to set up a dark theme. Now if you go up to the top left here, you can see we've got a J, which is for my profile, because obviously my name is Jordan. Click on this and you can see we've got a color theme. Click on that and you have the option then to change it from light to dark. For this duration of the video, we're going to keep it as a dark theme, just because it's my preference. Now we know to change to dark, we can see that there's a chart here, but we're going to want not just look at Euro USD, we're going to want to look at everything we need to look at. Now, if you cast your eyes over to the right, and I'll make it a little bit bigger. Now these charts and the different tabs, you can usually customize the size just by dragging it over, just like I've done there. This is your watch list. Now your watch list is going to be everything that's important to you that you want to monitor, whether you're in Forex, crypto, you trade commodities, stocks, or you're just looking at currency indexes. Anything that really goes on a chart, you'll be able to find on TradingView, and you can put into your watch list. You can see that it's been given subcategories. You've got stocks here, futures, Forex, and crypto. You can customize these headings yourself. For instance, if I don't want stocks, I don't look at stocks, I can click the X here, gets rid of the heading, and you can just highlight something, press delete on your keyboard, and just gets rid of the ones that you don't want. Now, if you want to add something into your watch list, you go to this button at the top where you can see the plus symbol and it's add, and you'll have the option then to search everything in TradingView, or if you just want to search stocks, Forex, indices, anything like that. But we'll just go all for now, or let's just say Forex for now because it's what we like. And if we wanted to add in, say, US dollar versus the Canadian dollar, well, I know the abbreviation for that is USD CAD. So we just type in USD CAD, and it will give you a load of options for USD CAD. Now, if you go to the right, it's just telling you where TradingView is getting the source from. A lot of people just stick to one. FXCM is pretty good for me. If I click on that, you will notice, oh sorry, I should have come into our thing, so USD CAD. Sorry, click on the plus sign here, and you can see now USD CAD has gone into a watch list. Now I can drag this up here, so we've got all our Forex in one place, and that's basically how you add and remove things from your watch list. Now you're going to want to do this at the start and figure out what things you want to look at, because it's going to make it so much easier when you're looking for your chart and analysing the different currency pairs on a daily basis. Now that we've looked at how to add and change things in your watch list, there is this tab down the bottom. Now, for instance, if we click on USD CAD, I can drag this tab up from the bottom past my head so you can see it, and it just gives you some basic information. It will give you anything news that's sort of been come up recently. So for instance, you can say 37 minutes ago, US dollar mixed again early Tuesday ahead of January S&P and global flash estimates. Well, I haven't got a clue what that actually means, but sometimes there are relevant things that come up. It'll tell you the day's range, the 52-week range, the performance over weekly, 6 monthly, 1 monthly, and this is like a technical to tell you whether you should be buying or selling right now, but I usually never look at this tab. I always make my analysis myself. I don't rely on that particularly. So if we cast our eyes into the middle then, and we look at the chart, let's have a look how we navigate through the charts themselves. Now, as you can see, because this is a free version, down the bottom left we had a little ad pop up. That will happen if you are using the free version. Now the chart itself, you're going to want to know how to manipulate it and look and get into the time frames you see. So at the moment, you can see up here, it says 4 hours, 4H. This means that this candlestick chart, each candlestick represents a 4-hour time period. Now, if you're going to want to zoom out or zoom in, if you're on PC or using a mouse, you can scroll and it will zoom out by scrolling downwards and zoom in by scrolling upwards. You can drag this chart to a point where you want to see it. Now, if you go over to the right where you've got these prices, you can drag this down, or again use your use the scroller on your mouse. And the reason we want to do this is because right now I'm only seeing a small period of time. If I wanted to zoom out and I wanted to see a longer period of time in the 4-hour chart, then I would zoom out like this and I would drag this chart down, and now it's giving me a more clear view of a longer period of time. If you wanted to zoom in on the chart and you wanted to focus on one point, so you just wanted to zoom in just here without moving, you can hold control on your keyboard, scroll up, and it's going to keep us right at this point. Now, you're not just going to want to stick to one time frame. The 4-hour chart is really good for looking at, longer trends and longer time frames, but you're going to want to look at even longer again, like the daily chart, or you're going to want to zoom in even more. Now, there's 2 ways you can do this. The first way you can do this is by going up here where you can see it's got the 4 hours. Click on here and it'll give you all the options for the different time frames. So, for instance, if I want to zoom in and go on the 1 hour, now this is showing us every candle represents a 1 hour time frame. And if you remember going back to our Forex for Beginners video, if you did watch that, we talked about candlesticks. You know that this is a bullish candle, where the price opened during closed here, and the wick represents how far the price moved during that time. And then this is a bearish candle. We know that because it's red, so it would have opened during closed year, and then you've got the wick of a movement year, and you can see how all these candles look different. Now, again, if you want to zoom in again, you can just click on here, and we'll go into the 15-minute, and now each candle represents 15 minutes. For me personally, there is a quicker way of doing this, but it only really works if you're using a keyboard. So rather than having to go up here and click through the time frames, going on to the 1 hour, the 4 hours, you could just use a keyboard. Now, if you wanted to go on the daily time frame, you just start typing 1 and then D for day, enter, and we're on the 1 day. Now you can see we're quite zoomed in on this, should we say. It's hard to see anything really, so I'm gonna have to go onto the right here and use this to drag it down into something that looks a bit better for me on the chart. And I'm using my scroller to zoom out. So we can see now US dollar versus Canadian dollar. This is a daily time frame, sort of been on an upwards trajectory here. Now it's maybe looking to go bearish, creating lower highs and lower lows possibly. Now, if you want to go and then look at the smaller time frames, I'm going to go 4H for 4 hours. You have to adjust it a little bit because every time you work for the time frames, you're still zoomed in at that point. So when you go into a new time frame, it's likely you're going to have to make adjustments to the charts and how they look. And again, you can see now it's just broken down what the price action is doing in the 4 hourly time frame. Maybe I want to go in a bit further to the 1 hour and see what's going on with the nitty-gritty stuff. And then again, you can even go down to maybe say the 5 minute time frame, and you can see how different it looks. Each candle here is representing 5 minutes. Now, if you want to go for the minute, all you got to do is type 5, or if you want to do the 1 minute, just type 1, enter, and you're on the 1 minute time frame. So, and that's how you basically navigate through the charts, how you change the time frames, and how you make the chart zoom in and out so you can get a better look at what's going on with the price. Now, the next thing I want to look at is, before we move on to looking at sort of different indicators in TradingView, is there's a customization you can have with this again. So we talked about the dark theme. Now, usually you can have a bullish candles green, bearish candles red, but if say you wanted to be a bit different and make it a little bit snazzy, or maybe you're colorblind and you're just not getting on with these colors very well, then if you go up to the right here and you go into the settings, then you've got the options to customize pretty much everything that's in here, whether it's the price line, whether it's the candles themselves. And we'll have an example. You can see here the candles. We've got the body, borders, and wick. So if we wanted to say, let's go, we'll have a purple one for a bullish candle. And let's just say we'll have a yellow for bearish. Now, I don't know why anyone would actually do this color, but it's just to show you an example. And there we go. You can see, doesn't look very good, but just to give you an example of the kind of customization you can do with these charts if you didn't get on with the current colors. Now, I don't like this, so they do have a, like most applications, an undo button, which is great for in this case. So we don't have to go back through, so I can just click undo. And there we are, we're back to normal now. So moving on then, I want to talk a little bit about indicators. But before I do, something I forgot to mention earlier. If you scroll to the top right hand of the screen, you've got this little button here that says watch list and details. You can toggle this button on or off to open or close your watch list. So if for whatever reason the watch list is not there when you first load up TradingView, that's why I just click this button. But for this part of the video, I'm just going to toggle it off so you have a better view of the screen. Now, what is an indicator? Now, an indicator is a tool used by traders within the charts for a variety of different reasons. So it could be used to establish the trend of a trade, what kind of buying or selling pressure you have. They can be used to show the momentum of where price is going. They can even be used for confluences to help get better entry signals on a buy or a sell position, which I'll talk a little bit about as we go along. Now, there are hundreds and hundreds of different indicators, ones that are standard within TradingView, ones that other users make. But me personally, I only use a handful of basic indicators which are well known by traders to supplement my trading strategies. Something I try and preach is to try and keep things simple, and sometimes less is more. Try to overcomplicate a strategy with too many tools or symbols. Now, if you want to add in a indicator to TradingView, if you go to the top up here, you can see this little box where it says indicators. Click on here. And you can see already I've already favorited one, which is the moving average exponential. Now, for now, I'll just remove that and show you how I got that there. Now, the first indicator I want to talk to you about is the EMA, which is the exponential moving average. It's basically an indicator that uses a mathematical equation to plot on the chart an average price depending on a length that you choose. And I'll explain now so it'll make sense. So we're in technicals and we're in indicators, which is where we want to be to add our indicator on. I'm going to search for the EMA, and you can see on here it actually comes up as moving average exponential. We'll star this and add it to our favorites because I know it's something I'm going to be using quite regularly. And if I want to add it on my chart, just click it. And you can see here it's added on the EMA, which is this little blue line that's making its way through the chart. If you go up to the top left, once the indicator has been added onto the chart, you will be able to view them here. So you can see I've got the EMA, which is a period of 9, which is the 9 EMA. And you can see here it says vol, which is the volume indicator, which is down the bottom. Now, I never really use this because it's just telling you how much buying or selling pressure happened during the time period, but you can clearly see that with the candles anyway. So, excuse me, you can either hide it by clicking the little I button, or you can just remove it completely, which is what I'll do now. Now, the EMA as it stands is not really useful in the period of 9. Because it's just really closely following what price is doing. The EMA can be used in different periods, and the three periods that I use are the 200 EMA, the 100 EMA, and the 50 EMA. Now, a lot of other traders use maybe the 51 or the 21, depending what your strategy is. You could do a bit of research yourself in terms of what will be the best exponential moving average period for you. But let's go through the ones that I use. So first of all, we'll start off using the 200. Now, if you want to change the length of the moving average, then if you click up here and you can see there's a settings button, we want to change the length and we're going to go with the 200. Don't touch anything else in here, it's all set up right as it is, but maybe I want to change the style of the EMA because I'm not fussed on the color blue, where I'll go in here and maybe I'll change it to yellow and maybe make the line a bit thicker so I can see it better. Brilliant. Now you can see here that the line has changed completely where it is on the chart, and that's because I've used and changed the length of the EMA 200, so it's using an average period of 200 candles to figure out where it should plot that price on the chart. And you can see the lines are a lot smoother. The main reason people use the 200 EMA as part of trading strategies is because it will tell a trader whether the price is currently bullish or bearish or it's just ranging. Standard rule with a 200 EMA is that if price is trading above the 200 EMA, we know we're in an uptrend and it's bullish. So you can see here, since we broke above this 200 EMA line, it stayed above. So really, we're going to be want to be looking for buys above this area. Same thing applies when we took a look at the euro US dollar, by the way. When it was in a downwards trend, the price was mainly trading below the 200 EMA, showing it was in a bearish. And any attempts at the time to break above the 200 EMA was rejected and the price was being pushed below. So another way you can use the EMAs as well is that sometimes the price likes to reject around that area. So if we know in a downwards trend like here, and the price does make it sort of around about the 200 EMA, then you could be looking for sells when it breaks back down below. The same with the buying. So we had buying pressure here, the price broke down about where the 200 EMA was and then shot back up. So just off this one indicator alone, you could be looking at this thinking, right, okay, it's hit the 200 EMA. If it starts reversing, I could look at a buy here and get a really good entry and make a lot of profit from it. Now, with regards to the 100 EMA, it's the same sort of principle, but with the 100 EMA, and I'll change the length to 100. This EMA, more for me, I use as an area of value. So when I talk back on one of my old videos, which was the Forex for Beginners Part 2, we talked about different areas of value on the chart of where you want to place trades. Maybe not so much on this one exactly right now, but the 100 EMA can often be used as a point of support or resistance. So for example, we've got buying pressure here, we've hit the 100 EMA, and we are then looking for a rejection back to the upside. So you can add this in with your different trading strategies as another confluence and helps you identify areas of value. Now, the EMAs will change dramatically depending on which time frame you're on. So right now, this is counting 100 4-hour candles to establish which way the EMA is pointing. If I was to go down to maybe the 1-hour candle, you can see here that the EMA has changed significantly. So the 200 EMA is something you may use on the higher time frames, like the daily or the 4-hour, to establish which way is going. Then you might want to go zoom in a little bit more on the hour chart with 100 EMA, say, to try and find areas of value on here. Now, the last EMA I use is the 50 EMA. So if I go back into the settings again and change the length to 50, so we're counting 50 candles worth of bars rather than 100. And you can see us change it again, just makes it a little bit more sharper. Again, the reason why I may use the 50 EMA mainly for me is to find more support and resistance areas. So for example, I've gone back into the 4-hour time frame, and you can see here massively that the price has been trading and rejecting off around the 100 EMA, and you will see this through multiple different charts. The one thing you want to see and establish when using these EMAs, especially as a point of support and resistance, is that you want to look back on previous price and see if it has been respecting the 100 EMA. Now, that's a main overview of EMAs. So really, just to recap then, where you can use the EMAs to establish what trend the price is in, whether it's bullish or bearish. And because we use them for showing which way the momentum is going, especially with something like the 200 EMA, if you see the price cross below the 200 EMA and keep going, then that could be showing a trend reversal over the long period. And we can also use them for points of support and resistance. Now, in my chart, I would usually have the 200, 100 and 50 EMA all in the same time. Something you've got to take note is that with the free version of TradingView, you can only have a maximum of 3 indicators. Don't get me wrong, you can change as you go along. You can put different ones in, or you can just change the settings like we did there. But just to keep a note of that. Now, the next indicator I want to talk to you about then will be something that we call the RSI. Now, the RSI stands for Relative Strength Index. Now, if I go back into our indicator list, so we come in the box here, click on Technicals, and I'm going to search for RSI. Now, you can see here it comes up Relative Strength Index. If I click that, I'm going to star it as well to put it into our favorites for the indicators. And you can see here is come up with this little chart down here. It's got 2 lines. It's got a purple and a yellow line, and it's got some values as well. Now, I personally like to have my RSI at the top of my chart because this is not something that gets applied on the main chart itself. And to do that, there's a little arrow here, move pane up. And you can click that button and it will go to the top for you. You can change the size of it if you want to just minimize it a little bit, depending what you're looking at and how you like to view it. So now the RSI is a momentum indicator, and it can give you 2 things. It can tell you where price is going and if it's bullish or bearish. Now, for example, when you're looking at this RSI, if the price is pointing downwards, then you've got a good idea that it's going bearish, and the same for bullish as well. If the price is moving upwards, and then we know we've got buying pressure. Now, this middle bar you've got here, which is the value of 50. When the RSI is trading below this, that generally means that there's a lot of selling pressure. And then when the price is trading above this area, so it's above 50, it's a lot of buying pressure going on. So number one, it could be a confluence for you to know that maybe you want to be buying with the trend. So you only going to want to take buys above the 50 line and sells below the 50 line because that's the way the price is moving. But the one way I use this, and the way a lot of other traders use it, it also gives us our points where a price, whether they be Forex or a stock, is generally being overbought or oversold. Now, what I mean by that is price just never moves in one direction. Now, don't get me wrong. You can see here on the Euro USD, there's been times where it's spiked quite high and it's kept going, and that could be because it's influenced by a specific news update. But generally, the price is always going to retrace and make its way back down before going up further. It's never just going to be one straight line unless something absolutely freakish happens. And usually when the price breaks above, some people say 60, but I like to see it above 70. For instance, you've got this up here, the price had moved all the way up to 70, about 78. There's always going to be a retraction in price when that happens. And you can see here, whenever the price has gone really low on the RSI, it's retraced upwards. Again, it's retraced upwards. Just going back here, you can see where the price is broken above the 70 line, there's going to be a retracement due. Same here, there's going to be a retracement due. And again, you can change the time frame. So we'll go from a 4 hour to a 1 hour, and the RSI will reflect the 1 hour RSI for you. And the same thing again, when the RSI is high, then there's a good chance it can be a pullback. So for instance, you can see this really big green candle here. The RSI broke high, and then there was a huge selling pressure momentum going all the way back down to the 100 EMA. The two ways that I use this indicator is that, number one, if it breaks above 70, then I'm definitely not going to try and buy, because there's been so much buying pressure, there's bound to be a sell-off at some point, so I try and stay away. But also as well, if we know we're trading with trend and we're looking for buys in, because we're in a bull market and we have a significant retracement. So for instance here, we know it's a bull market, because if we go back onto the 4 hour say, we know we're making newer highs, and this is trading a lot of the time above the 50 EMA, never mind the 200 or 100. We go into the hour chart, we get a big sell-off here. The RSI is really low. It's been oversold, so I'm going to be looking for buys around about here. And you could capture this little price movement here. The same thing happens here. Price is really oversold, and you could be looking for buys. Now, you don't just want to use just the RSI. You don't want to see it go really low and go, right, I'm going to buy now. Or see it really high, I'm going to sell. In my next video, when I talk about my different trading strategies, then I will give you the confluences that you will need to go with the RSI and other things to give you confidence to enter trades with a really good win rate. And that's basically it for me with the RSI. Really simple indicator, but mainly used to show the momentum of trades and where it's been overbought and oversold. So the next indicator I want to talk about then is something that we call the MACD, or it stands for Moving Average Convergence Divergence. Now, again, we'll go to our indicators tab, and we're going to search for MACD. And we've got Moving Average Convergence Divergence. We'll star it to get it in our favorites list, and then we'll click it and it'll open up. Now, just like the RSI, this opens up in like a separate little tab, which you can see here at the bottom of the screen. So the moving average, or the MACD, is basically a momentum indicator that can also give confluences for buying and selling signals. So let's first of all look at it. Also, if you want to bring up either one of these tabs full screen, you can double click them. So for instance, I can double click the main chart and it will full screen it and move everything else out of the way. Double click it to get back. And we'll double click the MACD and bring it up full for you. So this section here where you can see this green and red bars, this is called a histogram. This is basically telling you the momentum of where price is going. And it's pretty simple. When the bars are green and they're darker green, there's a lot of buying pressure. When they go a lighter green, it means the buying pressure is wearing off. And you can see here there's a lot of buying pressure and it's gone up again. And then when we switch over to the red, it's showing that there's selling pressure. So this is basically giving us the momentum of where the price is going at the moment. So again, with these charts, you can change them just like you do in the main candlestick chart. I'm going to drag this and pull it upwards to make it a bit more visible for us. And you can see how it reacts with the price. So when the price is going up here, you can see there's a lot of green for the buying pressure. And then when the price is coming down, we get the selling pressure. Now, other than just being a momentum indicator, something that a lot of traders use this for are these moving average lines here. So you can see here that these are two moving average lines, just like the EMA that we got here, and they're over the period of 12 and 26. Now, you could potentially look at these lines, and when they cross, it could signify that the price is going to start going the other way. So for example, right here, we can see there's a cross in the moving average lines, and where that cross happens, that's where the histogram then turns red. And just as you get this MACD cross here, what happens with the price? You can see the price starts going down. Now again, you've got a cross here to the bullish side, and what happens? The price goes up, and you can see this so many times through the charts. So if you go into the 4 hour, just like all the other indicators, the MACD changes with depending on what hour you're looking at. And you can see it. So just to give you a really good example of the MACD in action at its finest, I'm going to bring up another pair that I know I was looking at the other day. And that is AUD-JPY, which is the Australian dollar versus the Japanese yen. Now I'm on the 4 hour chart of this. So this is the 4 hour MACD. And just look how price had reacted to this MACD crossover. So around about here, we'll start here then, say, this green, we have a MACD cross here, and the price absolutely plummets down. Almost wanted to change over about here, but it quite didn't. And then again here, we have it crossing over to the bullish side. Price shoots up since then. Right here, so this is about this candle here. We have a crossover to the bearish side, so the price follows and drops all the way down. And again here, and again here, again here. And it's just like clockwork. It's not this perfect with every pair, but you can use this MACD. Look how the price is currently reacting. I know I took a trade using this MACD crossover around about on this section here. When it crossed over here, placed a buy, and I captured this one price movement in the market to make some profit. Really simple. Now, the last indicator I want to talk to you about is something called the ATR, which stands for Average True Range. Now, to get this indicator on, remember we can have a max of 3 indicators because we're on the free version. Currently we have the RSI, the EMA, and the MACD open. I'm just going to get rid of, let's say, the RSI for now. So if I want to get rid of this, because it's in a separate tab, you're going to find the RSI details up here. So rather than being here, they're going to be up here. So I'll click on the X, get rid of that. We'll go on the indicators list, and I'm going to search for ATR, Average True Range. Now, the Average True Range, and I'll move it up for me. Basically, the Average True Range shows how much price moves on average and can determine volatility in the market over a given time. Now, it's basically telling you at this given time, the price on average is moving with this particular pair 0.56, so about 45 pips. Let's go to Euro USD. You can see on the 4 hour chart, on average, the price is moving, again, 34 pips at this moment in time. What we can use this for really, and what most people use the average true range for, is when setting your stop losses. So, for example, if you were looking at maybe buys on Euro USD around about here, and you wanted to set your stop loss just below here, if it's really volatile, let's say in this period here where there was price moving up, down, and it was all over the place, and you can see that the average true range was around about 56 pips. Now you can see I'm looking at, if you're looking over to the right hand of the screen, you can see right here, there's giving you the the value, and I'm placing my cursor right where the ATR is at the time. You can see it's 57 pips. So you could make sure maybe if you set your stop loss and it's only 20 pips, you could then look at the ATR and go, right, actually the volatility of the market is telling me, price could move on average around about 57 pips. So you want to give yourself that room and your breathing space with your stop loss to make sure you don't get stopped out unnecessarily. And this is what some people use the ATR for in their trading strategies. Something to think about, and maybe to add in as another confluence, or and to add as a trading rule as you're going along. Give it a try yourself, see what kind of results you get, and let me know how it works out. So in this section of the video then, I'm going to be talking about the different types of tools you can use in TradingView. Now bear in mind, I personally try and keep things simple, and the ones I show you, you're not going to really need to use many more than the ones that I show. And bear in mind, I'm a full-time trader who makes profitable trades daily, weekly, and make a living out of doing this. And this is all I really use. Now, on the left-hand side of TradingView, you can see your little toolbar. So I'm going to take you through the different tabs and the different things that I use in there. Now, the first tab is where you can see just gives you the different types of cursors you can use. So the moment we got a cross, you can change that to a dot. Maybe you just want an arrow. Pretty simple. Or you got an eraser for if you do want to erase some of your drawings out from TradingView. Now, in this first section, you can see in each one of these you've got a little arrow, and the little arrow brings out another box with all the tools from that section. Out of all of the ones that are in here, I only use a couple. The main one I use is the trend line. So a trend line is basically used to, as it says, establish trends in a chart, but I also use the lines to help draw and figure out certain patterns that are going on. So let's just take Euro USD for example. When we were in this big bearish period, I might draw a trend line down here. Now a trend line basically is a period of price where it can meet on a straight line, and for it to be a trend line, it has to touch the line at least around about 3 times. Now sometimes you may never get a perfect trend line. Sometimes you do and it's brilliant, but sometimes you may get these times where price just dips out just slightly. But near enough is respecting these prices. So what can we use this for? A couple of things. Now you can use this for a support or resistance point, because we know when it hits a trend line there's a good chance it's going to reverse. You can also use them for establishing when the trend is reversing. So for example, I'm going to draw another trend line up the top of the price this time, and we're going all the way down the bottom. So what I've done here, just by drawing 2 trend lines in this chart, I've created what we call a channel. Now a channel is where price is basically trading within. Now in this case, when Euro USD was bearish for this long period of time, you could be thinking at the top of this channel I'm looking for sells, at the bottom of the channel I'm looking for buys, and it was respecting this price from, if you look at the bottom, we got the dates 7th of March all the way around about to the 25th of October. So for the large majority of the year you could have been trading within this channel, making profitable trades. You can use that alongside, maybe change this to a 100 EMA, and you could be looking for different points of resistance, areas of value. Really simple. So again, you could be zooming in on the 1 hour chart maybe, and you could be trying to plot out some different trend lines. So maybe we got a trend line running sort of up here. I mean, that doesn't really suit properly. I'm just trying to give you some examples for the video. Could definitely say there seems to be some sort of trend running around about here where we are now. So essentially we got 1, 2, 3, 4, near enough 5 touches off this trend line. And maybe when the price rejects down to a certain area, we could be looking for another buy around there, and that's basically what a trend line is. Now something also I use the trend lines for is you could be drawing different patterns. Now you won't know what this pattern is, but this is basically what we call a bull flag pattern, and basically the candles have formed a flag formation, which signifies that the price is going to continue up further. Don't worry about what that is now. I'm going to do a completely separate video with different candlestick patterns, but again, you can use the trend line for wherever you want. It can be drawing different patterns in the charts or just using them for trend lines. The arrow that's in the chart section, it's just simply what it is an arrow. Maybe you just want to make your charts look pretty, or you want to do some forecasting, and you can add the arrows in. Let me just delete all these out a minute. You have the ones I use then are horizontal lines, so you could use these for maybe marking out areas of price, or support and resistance areas. And you also got vertical lines, so maybe you want to mark out where like a news was released. So you could say, well, right here there was news release and I just want to mark down the chart, so I just know. Use them for whatever you want, really. And I don't really use anything else from in here. There are lots of different ones. Have a play around, see what works best for you. I mean, you've got something here called a trend angle. It's obviously used for something, and people probably use this, but I have no clue what it is, and it just goes to show that keeping it simple sometimes is better. Moving on to the next one, we've got the fib retracements. There's nothing at all that I use in this entire section. Now, a fib retracement is basically used by traders where you will draw from a bottom of somewhere. So for instance, it bottomed out here and you draw the fib up to the next high, and they use this as measurement for a hoping of a retracement somewhere in here, but I don't use that. I've never have. It's never been in my trading strategies. The next section down, you've got a brush you can use if you want to just make some quick notes or something, or mark something up freehand. You have a highlighter which just says what it is. This is a big one that I use. So when I'm marking up my support and areas, support and resistance areas, I'm usually marking them out with this rectangle. I just think that it lets you put an area of value on the chart that you're looking for particularly. So let's just go into a different chart really quickly. So we've got USD CAD. So as a swing trader, I could be looking down this area here and saying, right, there's been some major support in this area. So I could be looking for buys in this area. And there's also been, quite a lot of resistance in this area. So you could be looking for sells in this area. You've got another resistance point up here. So I'm just going around and marking my chart with these sort of rectangle boxes on areas of value. And then once you start doing this, the chart starts shaping up into something that you can actually visually look at and start understanding the price action a little bit better. So I'll just remove them from my chart really quickly. I don't really use anything else in here other than this path. Now the path is basically allows you to draw a path as an arrow, and to do that you just click the left button on the mouse once, click again for the new direction, click again, and then once you're done, you double click and it'll be there like that. The main reasons I use this is if I'm going to be, maybe wanting to forecast price movement. So this is not an actual forecast, so don't quote me by it, but for instance, you could have a resistance here and you may say to yourself, I think price is going to do this, and just gives you, the ability to lay out your forecast so you can go back later on and see how close you was. The next section is just a text box. You can put speech bubbles in and things like that if you wanted to say buy at 0.01 lots or something. The next section, again, I don't use any of these tools. There's obviously reasons for having them in here, and I bet a lot of traders do use some of these patterns, but I don't use any of them. In the next section then, there is probably the thing that you're going to be using one of the most of. So I don't touch any of these, but these are the ones you're going to be focusing on the most, which is the long positions and short positions. Now, these are going to be important because although you're going to be analyzing all of your charts on TradingView, the chances are you're going to have a separate broker which can't be accessed through TradingView. So you're going to mark your charts up on here, then you're going to place the trades with your brokers separately on a different platform. Now these just allow you to mark up your buy entries and your sell entries. So for example, And this is not a buy I wouldn't be buying here right now, but just for the basis of this video, let's say I wanted to place a buy here, right where the price is starting. I'm going to place the stop loss just down below. So this red area represents your stop loss. I'm going to place the take profit all the way up here. Again, this is not a good trade, but just showing you how you use this tool. What this is telling you is that you're buying the price here in the grey box on the right for 1.33724. Your take profit is 1.35189 and your stop loss is 1.3346. Now it's important to know these stop losses take profit, especially the stop loss, because when you work out with your risk size calculator how many lots you're going to need to know what the price was or how many pips your stop loss is. Now the great thing about this little tool that we use is that the stop and the target is put on you in the actual value of price movement. So if we were to hit our target price, we would have gained 0.01465. Now thinking back to my last videos where I've talked about how to work out pips, then we know straight off the back there's 146 pips or 147 rounded up. Same with the stop loss. You can see here 0.00318. So straight off the back I know this stop loss is 31 pips big, or I'm going to round it up to 32 because we're carrying over the 8. Again, you change this value and it's going to change with you. So that's 74 pips now. And it's just a really quick way of knowing how many pips your stop loss is and putting that into your risk size calculator. And the best thing is when you watch this play out, you can see how your trade's doing, if it's hitting your stop loss, and you can go back and review why the trades ended up a certain way, so why they've done well or why they've done bad. So take that off. Same thing with a short, it's exactly the same, but obviously the take profits at the bottom and the stop loss at the top. Like, let's just have an example. Remember we talked about the MACD earlier and how it crossed? Example, how you might have been able to use that to your advantage. You could have go back onto the 4 hour, which is what we were on looking at. So you could have had the cross here on the 4 hour. You thought, right, I'm going to put a sell on here, right where the MACD crossed. I'm going to put my stop loss above the high below, the last high on the 4 hour, and you could have a take profit ratio of something 0.2. 2.0 or 2.8, I think it is on there. And then you can just see how it's played out. You can see the price is reversed a little bit and then it's gone and hit your take profit. This section here, it just gives you symbols to use. Maybe you want to put a sad face because you've had a bad trade, or a happy face because it's been a good trade. This is just a ruler measurement. It can let you measure the volume of bars. It's not a real reason why I actually use that. And then all these stuff down here just to lock your draw in. So for instance, if you had this in here, and sometimes when you move them on the chart, it's really easy to accidentally move something. When you've taken your time to put it in accurately, you can go up the top here, there's a little lock button. It's the same thing you can do with there, and it just stops you being able to move that draw in. Just locks it in. I think that is it really for the tools I use. Like I said, keeping it simple. Have a little practice yourself. You know, there's no right or wrong when you're starting out. It's just getting used to using the tools and how they could, you know, give you an advantage when analysing the charts. So in this last section of the video, I'll try not to go on for too long because I'm conscious that the video has been quite long already. But I just want to talk about the difference between the premium version of TradingView and the basic version that we've already gone through. So you can make a decision whether the premium version is going to be right for you. Now, this is the premium version. I've just logged into my actual account that I use, and the first thing you can notice on here is that there are 5 indicators on the chart. So on the basic version you can only have 3 indicators per chart, but on this one I've got 5. I've got the RSI, the MACD and the EMA 50, 100 and 200. I can't have any more than that. It's a nice feature, but it's not the only reason why I would get the TradingView Premium. If that was the only thing that I had done, then I probably wouldn't get it. One of the big things on you that you can do is that you can actually create up to 5 different templates. So what that means is that, let's say this is the indicators I use for a certain strategy. Maybe I do like a scalping strategy where I want different indicators. Then you can create a new layout by clicking up here and add new layout. You can name it wherever you want, and you can add your indicators in, and rather than having to keep taking off and adding in different indicators, you can just load up to the new chart and the different indicators will be in there for you. So you can see in this one I've got ATR, MACD, I've got the 200 EMA on its own, and we've got the RSI. So that's a pretty decent feature that I would say that I do use quite regularly. And you can also have the different tabs open. So you can open up a new tab in the top, open up your layout that you want. So you've got the different layouts in the different tabs at the top. When you've got the premium version, you can change the layout of the actual view that you have. So you can add more than one chart into one screen. I personally don't really use this, or hardly at all, unless maybe I'm doing something else and I just want to watch a couple of charts but I'm not actually analysing them, only because it clogs up the screen and it's hard to see them. But it is an option on there if you did want to do that. Depending on the resolution of your monitor, you know, you can have several charts as well added on there. The next two things I'm going to talk about are the main reasons why I use TradingView Premium. And number one is alerts. So the main type of trading I do is called swing trading. Now, it's called swing trading because I look to capitalize on a single price movement in the market. So a swing trade could be having a sell here and then taking profit here. It could be having a buy here and taking profit here. Now, a lot of my trading relies on support and resistance areas. So for example, let's look at the live price. Now, I wouldn't be looking for sales in this market because it's bullish. We're on an upwards trend. I'd be looking for buys really. If anything, I've probably missed an entry and I'm looking for a buy around about here. But let's just say for this example, I did want to look for a sell around this area. And why? Because this has been previous resistance and potentially could be resistance again. Now, it's hard to just sit there and wait for that price to play out, especially if you're waiting for a good couple of hours for a guess there. With having alerts, which you don't get in the basic package, you can right click on any sort of price in the chart. So at this point, I want to right click here, and then you can add alert here. You can name it what you want. Maybe you've already worked it out what you want to do. So for example, I could put a short position on. Maybe I'm looking at using my tools to create a little path, and I'm forecasting this. I'm putting my stop loss up here. I'm putting my take profit down there. And if price reaches here, I want to add an alert and say, alert say sell Euro USD for 0.05 lots. Now, in my last video, we talked about risk size calculators and how to work out how much you need to add in. So maybe I've already gone and worked out how many lots I need for this. So what will happen then is if this price does move and it reaches here, I'll get an alert. Now, if I'm on my PC, alert will come up on my PC. But I've also got my login details linked to my TradingView details on my phone. And the app will actually ping me a notification on my phone ready to sell. So I can just be going about my daily business and my alerts will notify me of when price reaches a certain point. And this is really important for me as a trader. Now, you may use the same reason, but you maybe want to put a alert in for the take profits. You've gone into the trade and you can say TP hit Euro USD. So once you're in the trade, you can set an alert for where your take profit is, and you might get a nice little notification to say that it's closed and you've made some money. Really, really big game changers these are when I started using these. So, you know, I would recommend, if you are serious about trading, to think about upgrading. And the last thing I want to talk about then is backtesting. So if you're on premium, you can only use what we call the bar replay on the daily time frame. Now, that's not really good enough for actually testing trading strategies out. Now, a bar replay basically means you can click this little button up here at the top, and you can cut back in time, and you can replay the bars as they played out in the real market. Now, what this can help you do is, if you've got a new strategy you want to test out, you can go back in time and let the bars play out as they really did, but using your strategy and your rules and working out how many times you would have been profitable in the market for this year. So let's just have a really quick example then of when I might, or how this might work. So let's say I want to go back to, all the way back to year, which is 17th of March 2022. I'm going to do a bar replay back here. And maybe I'm looking to buy and sell on resistance points. So maybe your strategy is going to be, I'm going to look for sales around here. Now, this is not exactly what I would do in a trade, but I'm just trying to show you how it would work out. Now, you can either press this button here and it will play one bar at a time for you, or you can change the speed and let the bars play out yourself. And you might say to yourself, right, okay, I'm going to want to place a buy here. Now, you wouldn't really do this in a real market, but let's just say you wanted to. You could then play it out and see how you would have done. Ultimately, you know, if I'd have left this as it was, it would have hit a stop loss. And that's what the bar replay is and how you backtest in TradingView. Now, I'll probably do a bit more of a detailed video around backtesting and how to work it out properly. But this alone for me was the main reason why I decided to upgrade, because for you to be profitable, it's all about backtesting your strategies. And if you don't backtest your strategies, then it's unlikely, or you're gonna you know, be profitable in the market for a while, or you're going to lose a lot of money before realizing the mistakes you could have made in the backtesting. So that just about sums it up for today. I really hope you've enjoyed watching this video and hope you can take something away from it. Now go away yourself, have a practice in TradingView and get analysing those charts. If you do decide you want premium TradingView, I'll post a link below, and if you use that link you'll get $30 off your next subscription. There's also below will be a link to my Discord. Feel free to jump in, it's completely free if you want to ask any questions or want any extra support. Please don't forget to subscribe, comment on the videos and put the notifications on to make sure you stay up to date with my future content. Take care everyone, bye bye.